Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped further on Thursday after the following latest report that showed inflation is continuing to cool. The March Producer Price Index, or the PPI, was a welcoming report as traders cheered following the news that the US wholesale price, which is the PPI, which measures the prices paid by companies and is often a leading indicator of consumer inflation month to month, that sank by negative 0.5% in March, marking the biggest decline in almost 3 years after missing the forecast of a positive 0.2%, with the previous release at 0.0%. Now, excluding food and energy, so the core wholesale prices reading shed by negative 0.1% month on month, and much better than the positive 0.2 forecast, with the previous release at 0.2%. The PPI report confirmed the easing inflation trend from Wednesday's March Consumer Price Index. This CPI, which advanced 0.1% month on month, at a consumer price grew 5% on an annual base. In a separate report, the weekly jobless claims rose more than expected, adding further evidence that the labour market conditions were gradually easing. Initial claims for the state unemployment benefits rose by 11,000 to a seasonally adjusted 239,000 for the week ending in April 8, missing the forecast of 232,000. At present, global markets have priced in around a 70% likelihood of another quarter point interest rate when the upcoming meeting for the US FOMC's policy meeting, which is on the 2nd, 3rd of May. Looking at the current pattern, we can see that the Australian dollar is now challenging the key level, which is seen as the 60-day moving average at around 67.95 to 68 cents. Now, a clearing of that may actually confirm to the next target, which I called yesterday around 70 cents. It is very positive, even though we are a little bit overbought, but given for the fact that the technicals have all strengthened up over the last 3.5 days, to keep an eye on this level, and a clearance of 68, as I mentioned, should fuel the rally on towards 69 to 70 cents, with any pullback finding support around 67.35 to 45 on the day. Euro outlook, the market reaches its objective, which was around 110.70.75, but not backing away as the dollar index, as I mentioned, slipped overnight to 100.70, a key level, not closed under there, so it hasn't broken to confirm a further slide down to 98.99, and with the top side also holding for euro at 110.75, does present quite a challenging day for both markets. Any pullback should find support around 110.15 to 109.75. But if the dollar does break down and we do see a close above 110.75, this puts another 100 points in progress up towards 111.75.80. The dollar yen not as weak considering as the dollar slipped, but still holding up relatively well as the market now focuses towards the support level of 132.35. I'm not going to get negative here, although we are somewhat weak, but I feel the market could easily snap to the upside and take the challenge back to 134.80.90. So keep an eye on how the market progresses today. Sterling market still holding above that 125 level and looking up towards 125.65 challenge. Now a clearance there will give further scope up towards 127 as initial target, but we are a little bit overbought and therefore the MACD is weaker. Then we could see a rejection from 125.65, but still expect to see a pullback anywhere towards 124.75 or even down to 124.10.15 area and reassess. The gold outlook, the market is broken or cleared above the level, which was a key point at 2034, and now confirms the next challenge up towards 2046, and the objective, which is back what we saw here in February 2022 to a potential target of 2064 to 2072 and reassess. Wrapping up with oil, well, the market backed away from the resistant level that I was viewing around 82.90 to 83.25. keeping an eye on this pattern, there is clearly divergence. Now, what I mean by that is as the price rises and then makes a new high, we can see here that the indicator has made a high but another low. I feel there is a potential snap and move away from $83 a barrel, look towards $81.70 to $80 a barrel and reassess from there. Well, that's a wrap for the morning. Thank you very much for joining me. As always, look out for the intraday report and I hope you enjoy the great start to the day.